And take a look at the performance of the 5 biggest stocks since the March 23rd low. Facebook, Apple, Amazon, Microsoft, Alphabet, they are doing the heavy lifting. So how worried could investors be about the top heavy market? Michelle McKinnon is wealth advisor with Klingman & Associates. Loreen Gilbert is president of WealthWise Financial. Ladies, great to have you with us. Loreen, I'll start off with you. We have been in this state where the 5 biggest companies have been the leadership for at least the past couple of years. So why is it concerning at this point in time?
Well, technology is the way of the future, and we know that, and that's why we've seen such a run-up in technology. But we'd like to see a more broad-based market recovery, which we just haven't seen yet. And that's why I would say to investors to think about looking at some of the names or some of the areas that haven't had the same run-up. So if people are bringing in cash at this point, to start looking at other areas. Not that we don't like tech, we love tech, great sector, but there are areas of the market that we also like.
Michelle, do you agree? Is it time now to switch from the so-called growth trade, which has been pretty defensive, to the value area of the markets?
I wouldn't say I recommend completely switching out of tech. I think it's important to keep to your long-term strategic asset allocations. But I would actually look and see maybe it's time to rebalance. I know a lot of our clients are actually overweight equities because of the recent rally. And furthermore, if you do have some of those tech positions that have highly appreciated and have a large capital gain, now's a great opportunity about maybe thinking about gifting those shares to your donor advised fund. So not only can you gift to future charity, but also you can mitigate the long-term capital gain.
Would you say gift over rotate, Michelle?
I mean, that's just a question, how charitable you want to be. But I wouldn't want to say rotate. I think it's really important that you stick to still having growth in the portfolio. But I think being overweight here might be concerning.
Okay. Loreen, so if you say, you know, maybe to harvest some of the profits and move into other areas, what other areas should you be in? I mean, there are concerns about a second wave hitting the economy or that the reopening will be in fits and starts. And if that is the case, that is going to hit sectors that are the so-called value sectors, like industrials, for instance.
Right, but we also have a potential infrastructure package coming, maybe not before the election, but probably afterwards, and that would certainly help infrastructure. Another area that we're looking at are financials, which still, if you look at XLF, is down significantly, 20%, and if you look at the big banks, they're down around 30%. So certainly some opportunities there in addition to industrials.
There was that big article, though, Loreen, in the Wall Street Journal today about people in forbearance and student loans, auto loans, other types of debt in which people are having difficulty either paying right now or they're in forbearance right now. So it has yet to be seen as to whether or not when the forbearance period ends, if they will be, in fact, able to pay. Is there a question mark on the banks at all, especially as we go into the stress test next week?
Right, but you heard the Fed say just this last week that the banks are well capitalized, and he reiterated that in his testimony before Congress. And so I think we can believe that our banking system is in good shape. And if we compare it to the 2008, 2009, we have nothing like that when it comes to our banking and financial system. So we still see that there are opportunities there going forward.
Michelle, what areas of the market do you like right now?
I mean, again, I think it's important to stick to your long-term strategic asset allocations. Think about what's undervalued. I agree that I think some value names absolutely are undervalued. We have a small favoritism to emerging markets. I think the demographics over time, as well as a growing consumer base, look attractive. But I would not over or underweight anything significantly here.
So within the U.S., you're not going to tell me what sectors of the market you like?
I mean, we invest across the market, so we don't particularly favor tech or anything like that. We believe in long-term strategic asset allocation on growth and value.
Okay, we'll leave it there. Michelle and Loreen, we appreciate it. Thank you.
Thank you.